All right, today we're jumping right into a technical teardown of a company that just had a monster day. Ondas Holdings, ticker ONDS. Let's dig in and see what the data is really telling us. So this is the number that really turned heads, 9.45%. Yeah, a jump like that in just one day, that's massive. It's the kind of thing that makes you lean in and go, okay, what is going on here? Because, behind a big, flashy number like that, there's always a deeper story. It's a story told through data, through all sorts of indicators, and a lot of technical jargon. So, what we're going to do is translate that story for you and get past the headline to really understand the mechanics behind this surge. Okay, first things first, let's set the scene. What was the spark that actually lit the fuse for this stock's explosive move? And just so you know, everything we're about to talk about, it all comes from this one technical analysis report. We're basically going to break it down piece by piece so you can see exactly how analysts read the tea leaves on a day like this. So here's the thing. This wasn't just some random fluke. No way. This whole surge was kicked off by an absolutely killer earnings report. I mean, ONDS didn't just beat estimates, they blew them out of the water. And then they raised their guidance for the future. Big time. A lot of that's thanks to a smart acquisition they made in counter-drone tech, which, let's be honest, is a super hot area right now. So that's the real fuel for this fire. All right, so we know why it happened. Now let's look at what happened. How did all that good news actually show up in the trading numbers for the day? So it closed at $7.18. That's our anchor point. But, a price by itself doesn't mean a whole lot, right? We really need some context to understand what that number truly signifies. And boy, do we have context. This isn't just a good day. The stock is trading right at the tippy top of its entire 52-week range. The report calls it a 100% position, which is just a technical way of saying it's hitting brand new highs for the year. That is some serious upward momentum. And get this, the volume was just insane. We're talking 184.45 million shares traded. This wasn't some quiet little move on the sidelines. This was an absolute frenzy. The report says that's massively above average, and it tells you one thing. A ton of people were piling in with a whole lot of conviction. Okay, let's just quickly recap. We've got a stock hitting new highs on huge volume, all because of fantastic news. Now for the fun part. Let's dive into the technical indicators and see what they're telling us about what might happen next. First up, we've got trend indicators. These are basically your compass. They're not just telling you up or down, they're telling you how strong that move is. Are we talking about a little breeze here or a full-on gale force wind? And for ONDs, well, the answer is pretty clear. The wind is definitely at its back. The report looks at indicators like ADX and Arun, don't worry about the names, and they all scream the same thing. This uptrend is powerful, it's dominant. The market consensus is a big thumbs up. But here's the deal. A trend is nothing without conviction, right? And that's where volume indicators come into play. They're all about measuring the muscle behind the price move. Is this a heavy-duty power lift, or is the stock just kind of floating up on weak energy? When you see high volume on a move up, that's a huge sign of strength. And this is where things get interesting and a little complicated. It's not all sunshine and roses. So yeah, you've got some really powerful bullish signals, but then you look at other things like the accumulation/distribution line, and it's actually negative. So what does that mean? It suggests that even though the stock closed way up, there was actually a lot of selling happening under the surface during the day. Think of it like a little crack in that shiny bullish armor. So that little crack leads us to a big warning in the report. They call it a mild trap risk. Basically, it's the idea that maybe this surge happened a little too fast, a little too soon, and if the people who got in early start selling to lock in their profits, well, the whole thing could reverse, and fast. It's what traders call a classic bull trap scenario. So what do we have? We've got strong trends saying go, but we've got mixed volume signals saying, wait, hold on a sec. So how does the report pull all of this together into a final conclusion? Let's look at the different ways this could play out. Essentially, the analysis lays out three paths. First, the bullish path. The momentum keeps rolling and the stock breaks through its next ceiling, what analysts call resistance. Second, the bearish path. That bull trap we talked about springs shut and the price falls back to a key floor or support level. And finally, the neutral path. The hype dies down, volume dries up, and the stock just chills out and moves sideways for a bit. So, where does the report land? Well, it's still leaning bullish, but with a big dose of caution. The final recommendation is basically to buy the dip. If the stock shows any weakness and pulls back toward those support levels, that could be your moment to get in. The ultimate target is $8 or more, all riding on that bigger, long-term story about growth in the defense sector. And that really leaves us with the big question, doesn't it? This whole situation with ONDS is a perfect example of what analysis is all about. You've got this fantastic story, you've got strong trends pointing up, but you've also got these little warning signs hidden in the data. It really shows you the central challenge, right? It's all about weighing conflicting signals to make a call. There's almost never one single perfect answer. The real skill is looking at the whole puzzle and deciding what it means to you.